Prof. Krugman, welcome to In Conversation.
Hi, good to be on.
Are we sliding into a recession, maybe even a depression?
I certainly don't see depression. I mean, it's, of course, no one ever does. Nobody ever successfully forecasts even recessions. But right now it doesn't look, I mean, we might have a technical recession in Europe. We have at most a slowdown in the US and in China, both. Growth, we're still growing, but more slowly. But there's clearly, there are certainly problems. Whatever optimism you may have had about near-term global growth a year ago is not looking very good right now. We're clearly looking at subpar growth in going on right now, and probably slower in the next few quarters.
The impression you get from the headlines is that this is due to the trade war between the US and China and the various spillover effects. But is it?
I think that's a very large part of it. I mean, part of what's happening is simply that we had one stimulus policy, which was the US tax cut, which wasn't very stimulative but did give a boost, but that's behind us. So whatever stimulus we got is in the rearview mirror. But the trade war is clearly having a chilling effect. It's having a chilling effect on business investment.
But by that argument, if there was a different president in the White House, then all of this would go away and we would go back to, so to say, happy trajectory of global growth.
Well, the trade war is not the only problem, and you would not have a different U.S. president is not going to be like Trump. It's not going to make policy by tweet. It's not going to just declare that we need to block imports of steel from Canada to protect national security. The crazy stuff. But on the other hand, I'm not sure that even if a Democrat wins next year, that she or he is going to be in a rush to roll back the clock. So it'd be a less unstable environment. But imagine yourself. Are you going to want to be the person who takes off a bunch of tariffs on China, sees a surge of imports from China, and then gets blamed for the loss of jobs? In some ways, it's going to be very hard to undo the damage that's been done already.
But if you did have a removal of the tariffs, or at least a return to the way the tariffs were prior to all of this, then surely we would say, no, in fact, the American economy would do better.
It would to some extent, but the trouble is, I think there's a kind of a loss of innocence that's taken place.
That's a very non-economic term.
Well, but I mean this in
a loss of
I actually have a real sense. If you had asked me how did the world trading system work, I would have said that the one most important thing about it was not just that tariffs were pretty low, but that there were rules, that countries couldn't just arbitrarily slap on tariffs. You wouldn't just have a leader of a major economy say, I don't like China, so I'm going to put tariffs on, and never mind the justification, or whatever it is. I'll just call it a national security threat. That was understood to be not, the rules of the game said you weren't supposed to do that. Now we've just seen it happen, and that, without any drastic consequences, without legal challenges, that can't be undone. From now on, everyone will know that major economy leaders are capable of finding loopholes in trade law that allow them to slap on tariffs. That it's that the assurances of a stable trading environment that we thought were guaranteed by international agreements really were pretty hollow, and that's not coming back.
Let's say, for example, that China gets together with India and together with the EU and brings this all to the WTO and says, America cannot unilaterally slap on tariffs.
Well,
is that the solution?
WTO has an appellate body, and I think it hasn't quite yet, but very shortly, there will no longer be a quorum. So the WTO won't even be able to make rulings. And then also, how many tanks does the WTO have, right? I mean, I think what we've always relied upon is that the key players considered maintaining the system important enough that they did not defy.
So it was self-restraint.
Yes, it was self-restraint based on the belief that it was in everybody's interest to have a functioning system. We've now seen that the United States no longer plays by those rules. It's not clear that China ever really did play by those rules. So does it matter? If the WTO is even capable of making rulings anymore, what happens if countries just say, says you know?
But then that is not just breakdown of things like the World Trade Organization. Isn't that also just a breakdown of our entire global system, from the United Nations to anything else, where we agree not by the United Nations enforcing it with tanks, right, but rather by some form of self-restraint and generalized agreement?
Yes, although trade is fairly unique. I mean, we have international, we have things like NATO or whatever, international defense alliances. For the most part, we don't. The reason we don't have a whole lot of wars right now is not that the UN stops them. It's that most countries have figured out that wars are actually a really bad business, not worth it. But the trading system is unique in that it really is a set of you have global agreements that have actually been effective and have really restrained even powerful countries, and that's an era that may have come to an end quite abruptly just in the last couple of years.
So every country is going to do things which are completely self-interested, and that it's going to be strongly politically motivated. Perhaps it always was, but it's now going to be ostensibly so. Is that what you're saying?
Yes, the global trading system, it's not about national interests. I mean, the national interest is usually best served by free trade, but there are special interests within each country. You now get to a situation where special interest groups again can lobby, or where just the whims of global leaders, and I don't think that now that we've seen that can happen, that even if we get a much more restrained set of leaders in the world, even if we have a very old style trade policy talk from the next U.S. president, the fact of the matter is people now know that system that we thought we had was always much more fragile than people thought it was.
President Trump would argue that the trade war has been brilliant for America. Let me play the devil's advocate. President Trump would argue that the trade war has been brilliant for America. Unemployment is at still historic lows. GDP is looking perfectly healthy. He'd say America's doing wonderfully out of this. And even the world might be doing wonderfully out of this. China has been forced to open up. It's being forced to play more by the global rules, in fact, he would argue.
Except that, in fact, right now GDP growth actually is kind of subpar, we think. I mean, the official statistics are lagging, but tracking estimates suggest that we're under 2% in the U.S., which is not very good. Trade deficit has not come down at all. Manufacturing is contracting in the United States. So this is not what we were promised from a trade war. And when you bear in mind that the United States had an enormous fiscal stimulus.
But people still have jobs.
Well, if you're willing to run up the deficit, the federal deficit we're now running deficits about comparable as a share of GDP to what they were when we had 8% unemployment. If you're willing to do lots of fiscal stimulus and just pay no attention to all of that fiscal responsibility stuff that people were talking about 5 years ago, that's not that hard. But considering we're not getting very much of a payoff. I think it is true. Unemployment is low. We have a tight labor market, but everything we know says that that's in spite of the trade war, not because of it.
So you're saying that in the end, America will have to pay the price for this at some point?
Yeah, I mean, you can see it. Business investment, CapEx has really seems to be in a decline. Consumer spending remains strong, but consumer confidence has just fallen off a cliff. So maybe that doesn't really translate into lower spending, but people are aware. I mean, a lot of those tariffs are going to hit, in the next, actually right now. Friends are telling me that Walmart has gotten a whole lot more expensive just all of a sudden. And I think the most important thing from my point of view is it's not, how does this end? Is there any plausible set of Chinese policies that would satisfy Donald Trump? And that's hard to, I think the Chinese, actually they've been pretty vocal about that, saying that we don't know what the Americans want. We don't know what it is we could do that could satisfy.
And do you agree with them?
I agree with them. There are real issues in intellectual property, industrial policy that amounts to de facto violation of the trade rules. Those are real issues, but it's not at all clear that that's what, the U.S. has not formulated any demands that I understand. And I don't think it's formulated any demands. I mean, I think end the bilateral trade imbalance, but that's not actually even something that even the Chinese government has the power to do.
Let's move to looking at what all of this means for us here in Asia. How is this going to impact us?
I think, I mean, at the moment, it looks like it is a problem. It's certainly, U.S. is now putting really quite high tariffs on virtually everything that China exports. In many cases, there is no real alternative. So people will continue to buy stuff from China, but some of it will shift. We can already see that there's substantial shifting to smaller Asian economies, and some of this is things that were already happening. Things like the apparel industry were already moving to lower wage countries like Bangladesh. But then there's probably a lot of just plain people don't end up buying things at all. So you put tariffs on footwear, we're not going to revive the American footwear industry. It's just too far out of, at least not in any short term. Probably people just end up buying fewer shoes, and that means that it's a loss on the export side to Asia as a whole.
What about some commentators who say that really all of this could benefit at least some of the Asian countries? We've mentioned, for example, Vietnam.
That's right. I mean, within limits. I mean, the only problem I think is that China is also an importer of goods from these countries, and they'll lose. But I think on the whole, there is, as long as it stays focused on a U.S.-China axis, then there will be some beneficiaries of trade diversion. I mean, it's you can say the corresponding thing. The U.S. farmers have been dreadfully hurt by the drop-off of Chinese purchases of farm goods. That's been good for Brazilian soybean growers, for Canadian wheat farmers. So there will be some, as long as it stays localized. Now the trouble is that if eventually, I think you can already see this kind of happening. That is, as people start to say, as Trump and his associates start to say, well, what good does this do us if we just buy from Vietnam instead of from China? Then they start to just widen the trade war.
But what about a world that is less globalized, and in one in which Asia, perhaps together with South America and Africa, and perhaps to some degree Europe, begin to trade much, much more within themselves, and in which the US is decoupled from that system?
Yeah, you can think of that as kind of a Belt and Road world, right? Where it really Eurasia becomes and maybe South America as well, but becomes a trade. I mean, to some extent that can work. The United States is still a big part of the world economy, but not as critical as once it was. The trouble, I think, is that a lot of us believe that these global value chains have been important beyond the direct cost savings. That this intermeshing of industry has been really important at generating international transfer of technology, of ideas, that best practices spread. That it's really been an important factor in Asian development that Asia has been, and American as well, but certainly that Asia is part of a network that spans the whole globe, and so that good ideas developed anywhere quickly get adopted everywhere. And once you start to fragment that, then maybe we're looking, global productivity was already starting to slow before the trade crisis came along, and this can possibly cause it to slow further, which is not obviously not what we want to be seeing looking forward.
And if you were to give advice to President Xi about how to tackle President Trump?
I have no idea how to tackle President Trump.
Let's look just at the next 6 months to the next 2 or 3 years. If you were a businessman, what would you do?
I'd be cautious. I mean, I don't see a catastrophe looming. Of course, but of course we never do. Nobody ever sees those. The only people who successfully predict major crises have also predicted many other crises that didn't happen. But everything is suggesting that growth is going to be sluggish, that that sales will not be so good, that we're not looking at we're looking at weak, not necessarily a declining, but weak economies over the next who knows about 3 years from now, but over the next year or two. So that if I were thinking about making commitments about spending on it, I would probably hold off, wait for some further evidence. Of course, the thing is, that's a self-fulfilling prophecy. If everybody starts to, and that's actually what seems to be happening, is everybody is holding off, waiting to see how this all plays out, and in so doing are generating the slowdown that makes people even more cautious. And I guess if you want to tell a story about how we could get a global recession, that's how it happens.
So that's the irony, isn't it? Because you're saying, well, be cautious, but being cautious means that we're not putting more money into the system.
Well,
the pump doesn't have that much water.
Well, that's the
So we need to spend, don't we?
That's why we have Keynesian economics, right? The whole point being that perfectly rational, reasonable individual decisions sometimes add up to a collectively really bad outcome. Just in 2009, everybody was cutting back on spending, and the problem is that my spending is your income and your spending is my income, and if we all cut back at the same time, and we're getting to a little bit of that now. It's an order of magnitude less serious now than it was 10 years ago so far, but it's not looking great. And this is what particularly the bond market, even more than the stock market, is telling us. The bond market is everybody sort of looking around saying, oh gee, where's the spending going to come from? And that's why 10-year rates have fallen so dramatically since last fall.
So what should governments, particularly in Asia, be doing? More infrastructure spending?
If necessary, and I think it's or more something. I mean, in the long run, China has got to wean itself off this dependence upon infrastructure spending as the answer for everything. It needs more. It's the opposite of the U.S. We need maybe less consumer demand and more infrastructure, but China needs more consumer demand and not so much reliance on infrastructure. But doing whatever it takes to avoid a recession is almost always the right thing to do. And so, take whatever steps are necessary to keep the money flowing.
And if you were to give advice to President Xi about how to tackle President Trump?
Oh, I have no idea how to tackle President Trump. I mean, when you're dealing with a man who's going to argue about what the weather forecast said, how he's supposed to deal with, I think that my advice to Xi would be to be prepared to deal with whatever comes along. That you cannot count on reaching a resolution on the trade war. In fact, I would be extremely surprised if the United States, if Trump doesn't go through with the full range of the tariffs he's proposed and then some more. So that for the next, however much time we have here, for the next 18 months, U.S. trade policy is going to be very unfavorable for China. And China needs to have a contingency plan to sustain its economy in the face of that U.S. Protectionism.
And that means all the other countries in the world as well.
Well, yes. I mean, for the moment, I mean, I think the Mexicans are looking and saying, well, we seem to be out of the line of fire for now, but the Europeans maybe not. The next shoe to drop might be a national security tariff on European auto production. So other countries should also. Everyone, I think, needs to be prepared to do what it takes to keep their economy rolling, even if even if exports are being hit by a trade war.
And do whatever they take, whatever it takes. What does that mean?
Whatever it takes. Well, what that meant.
Increased deficits, government spending.
Yeah, government debt has been vastly overrated as a risk. The risk of inadequate spending is much more serious. And look, we're in a world of extremely low interest rates. Where trillions and trillions of dollars of government debt actually has negative interest rates, and even in the U.S., the inflation-protected borrowing has approximately zero. So it really doesn't cost anything to borrow. So yes, spend.
The simple answer. But the argument always against that spending and deficits has always been that the current generation doesn't pay for it, but the next generation will, and that it would be irresponsible to do that.
But that's a fundamental misunderstanding. In the end, certainly from the point of view of the world economy as a whole, debt is money that we owe to ourselves, right? It's not a bunch of space aliens who own the debt. It's the world as a whole that owns the debt as well as owes it. And it's not the reason to worry. If you would worry about issuing debt if you either thought there was a serious risk of government insolvency, which doesn't appear to be for any major player right now, or if you thought that government spending was coming at the expense of private spending, that it was crowding out private investment, but there's no hint that that's happening either. So, no, I mean, I think we're nowhere close to a point where the risk is of too much spending by governments, and much more likely that we'll suffer from too little, at least in the next few years.
Prof. Krugman, thank you very much.
Thank you.